8 to 10% price return has happened 4 times since 1950.
You said it's that time of year when Wall Street's top strategists tell clients where they see the stock market heading into the year ahead. The strategists, followed by Ticker, have year-end S&P 500 targets ranging from 7,100 to 8,000, which would imply returns between 3.3% and 16.4% from early December, which I'm guessing is probably not that big of a change. You note, following 3 consecutive years of above-average gains, some of these targets may seem aggressive, but historically, targets tend to assume 8 to 10% returns, consistent with the midpoint of this year's predictions. So they're nothing if not consistent. It basically works out to an 8 to 10% call. And of course, as we've talked about here on the show, the irony is it's never up 8 to 10%.
So Bespoke Investment Group actually published a report last week, and they did do some historical analysis going back to 2000, which is, I mean, basically that's when Byron Wien and those guys are starting these price targets. And yeah, the average throughout history when it comes to strategist price targets amounts to 8.9%, which is that sweet spot of that average 8 to 10% return. You know, that's incredibly misleading without, you know, some context. And, you know, our friend Ryan Detrick at Carson Group, you know, runs all these numbers all the time. 8 to 10% price return has happened 4 times since 1950.
Almost
so it's
never.
like, yeah, it never happens. And getting back to that Bespoke study, you know, they also note that, like, while the average target over the past, you know, 25 years expects 8 to 9% returns, the margin of error is about 14 percentage points relative to what has actually happened in the past 25 years. So yeah, no, they never nail it. It's if anything, you know, nailing it should be the last thing you expect.